You want to introduce yourself to the group?
Yeah. Hey, Shane Warner. So, started this whole thing with a Signal group chat, and it has ever evolved from there. Mainly because of Pat and Savannah just driving this train forward. Super appreciative of them. But yeah, so I'll go over the kind of the stock game and then stock overview here. But yeah, that's about it. Do real estate stock stuff, just bounce back and forth between the two, trying to make it all work.
Sweet. And our newest, I don't know, COO, we'll call him, Mac.
Hey, yeah, I'm getting out soon, and Pat asked me to help out with the operations side of things, and I'm getting a master's in real estate right now, so it kind of seemed natural to contribute to the group. So hopefully I can be of some assistance.
Yeah, you've already been huge. Can't thank you enough. All right, my lovely wife there, tech support.
Hey, I'm Savannah. I'm not a ranger. I just got out of the Air Force and I'm actually in computer science. I did real estate for a little bit, and by real estate for a little bit, I mean I was a real estate agent and now I'm back in tech. So I'm just here as a support team for Patrick, I guess.
And it's greatly appreciated. All right, JL.
Hey, I just retired from special ops about 2 years ago. I've been helping people for the last 17 years purchase homes. I own 3 rental homes, and there's all kinds of tricks to the trade. And it's just amazing that, here we are in the year 2024, and, you got young rangers and you got old people still purchasing property or an actual house, and they're getting rung through. Everybody is taking a percentage of their sale. And it's just amazing that, when people go to negotiate, they have no real idea what the home value is worth or what the land value is worth. And it's crazy. I don't mind the average person getting raked over the coals, but when it's, somebody that's been in the Rangers or somebody that's been in special operations, I take it kind of personally. And yeah, this is my first time in this group. I really don't know what you guys do, but that's why I'm here to just kind of learn, listen, and see if I can benefit or if I can help the group out in any way.
Yeah, thanks for joining. We, if nothing else, what we aspire to do is just to help rangers build wealth through real estate investing. And our like target audience is that young ranger who's thinking about his first real estate investment. So if we can provide him with the resources and the mentors and the know-how to not get raked over the coals, then Ranger Investors has been a success. But there are a lot of other tangential efforts that are spinning out of Ranger Investors. So like on one end of the spectrum, you've got, I know a guy in the group, 18 years old, he just bought his first place. And then on the other end, you've got guys with multi-million-dollar real estate companies and everything in between. So thanks for joining. Hopefully you stick around. Offit, I see you there.
Hey, what's up, guys? Offit or Stefan, whatever you guys want to call me. Been a ranger for a little bit now. Love real estate. Have a rental up in Ohio. Live in Richmond Hill. Kind of in the process of turning my current primary residence into a rental and buying another house. But yeah, that is about it.
Welcome. One of our most loyal followers. Chad, welcome.
How's it going? My name's Chad Olson. I've been out for a little bit, but it was in 275. Since then, got a degree. I live out in Indiana. Got a degree, house hacked my way to 7 units now. And then for my day job, I'm a director of acquisitions for real estate private equity, mostly going after multifamily units here in Indiana and then around the country.
Nice. Welcome. Teresa, you there?
Yes, I'm here. Hi, I am Teresa Vizcaya, and my husband Gabriel is a ranger, and we own a property in Hinesville that was an Airbnb, but now it is a long-term rental. But we also just started staging Airbnbs and getting into the construction world, so that's been a lot of fun. So nice to meet you all.
I'm surprised you didn't plug your new company.
Yeah, she's an amazing
That's
interior
like
designer too.
the coolest part of your intro.
Thank you. Thank you.
All right. Last but not least, Brian. It's good to see you. I don't think anyone else here knows you except for me.
Hey, how you guys doing? Brian, I'm completely out. I'm living the stay-at-home dad life. I got 2 baby girls. My youngest actually just turned 1 today, but my other one's 3, and I'm a real estate investor full time. I'm at 25 units. Just sad because as of a couple months, last month I was at 31, and I don't usually sell anything, but somebody made me a good offer on a 6 unit, so we sold that. So at 25. Things I could probably offer the group is I think I've used every type of loan out there. So I started with the VA, FHA, lots of different private money, construction, cross collateral loans. So hopefully, if I'll be able to help some of you guys with one of those down the road. Yeah, and that's it. I've been out for a couple of years now.
Yeah, I think one of the last times I remember you and I talking about real estate, I think was in Ranger School, like in line for some stupid fucking obstacle.
Yeah, real estate was a big topic in school. Yeah, for sure.
Yeah. And I remember, God, I don't know who it was, but someone might have been like Luke Ryan, who was like, "Hey, this guy knows real estate."
Yeah, Luke Ryan and Mark Perillo, we were all chatting real estate quite a bit.
Yeah.
I started in 2016. It was soon after my 30th birthday when I bought my first one. So I had been investing for a couple of years by the time I went to Ranger School, and I always say I wish I started in my 20s, but here I am.
Yeah, that's all right. The youngest I know of in the group is like there's 18-year-olds who are. There was a 20-year-old who bought a multi-unit. It's these kids are crushing it. All right. Well, without further ado, let's jump into the meat of this call. So, Shane, if you want to take it over, and I will. I'll pull up whatever you want me to.
Cool. Sounds good. So I kind of just recently added in the stock market component to this. Obviously, I mean, the main chat is all real estate, but I felt like stock market stuff plays into it very well. And it's also a way for people to broaden their portfolio. I've also used this to fund a lot of the real estate stuff that I do. So it helps, right? So I can focus for a while on real estate. And then when I don't have the cash to do that, then I kind of switch over and do stock stuff. Not a day trader, not anything specific. And everything I'm covering here is like stock market 101. And really, hopefully people will watch the video later and then understand the market game and how that will benefit you in actually using the stock market. So again, I feel like there's decent experience in the call. So I feel like almost everybody here has done some stock market stuff, but if not, I'm going to run through it. Like I said, kind of right from the beginning. So the first thing is whether it is a Roth IRA, any way to get into the stock market, right? The first one is a normal brokerage account, a Roth IRA, a regular Roth, TSP, 401k, all of that stuff ultimately is an investment into the stock market. And how I think about those is those are all different types of checking accounts that you can only buy stocks with. So you can put money into that checking account that you can buy stocks with, you can sell stocks with it, and then transfer that money from your checking account or your brokerage account back into your normal bank accounts. The reason I kind of broke down some of those different ones is to talk about the taxes when it comes to those, because it's not just magical. You can't just take money, invest it, and get all your money back and then never be taxed for it. At some point, you'll incur taxes. So I'll go over the brokerage account first. You put, your normal amount of money into that account. It's taxed just like your normal income. You put it in, you buy stocks, and then you don't get taxed on that money until you pull it out of your brokerage account. And you only get taxed on the amount of income that you've made off of that. So I'll use an example of $20,000. So I take $20,000, move $20,000 into my brokerage account, buy a bunch of stocks with that $20,000, grow that $20,000 to $40,000. Then at some point in time, I find a real estate deal that I want to use that $40,000 to execute that real estate deal. When I transfer that $40,000 to my normal checking account or to another account that I can actually execute the sale with, I only get taxed on the additional money I've made. So the 20,000 additional. I don't get retaxed on that 20,000 going into it. And all that is taxed at your normal income. So if you made $60,000 that year and you pulled that additional $20,000 that you're taxed on it out of the brokerage account, then your total annual income for that year would look like you made $80,000. So when you go do your taxes at the end of the year, you probably wouldn't see a great return, because most of it would be sucked up because your normal W-2 pull out of what it's expecting to cover of $60,000 has now been bumped to $80,000.
I mean, what brokerage account are you using, or like what company are you trading through?
Yeah, so I use Charles Schwab. The reason I use Charles Schwab is simply because I initially did all my brokerage stuff through USAA, and then USAA moved all their brokerage account stuff over to Charles Schwab. So I got shifted over to Charles Schwab without me choosing it. And I've actually been extremely happy with it. The app is super easy to use. I can buy, sell, trade, monitor everything on the app. Super easy. I'm not a preference to anyone, whether it's Vanguard, JP Morgan. I don't even know any of the other ones because I haven't really shopped around for any other brokerage.
But there's no fee on your trades, right? And there's no cap on the number of trades you're doing.
Correct. There's none of that. And then I also have my Roth IRA, because I have my Roth IRA in USAA, and then it automatically transferred over to Charles Schwab. So I have my normal, just trading stocks account, and then I have like my retirement, my IRA account in there as well.
Do you have a traditional IRA too, or you just have a Roth?
I just have a Roth IRA.
Gotcha.
So the difference between the two is the Roth IRA, you pay taxes on it on the front end, and you don't pay taxes on the back end. So for example, I put that $20,000 in, I get taxed on that $20,000 just like I made the $20,000 that year. But when I grow that $20,000 over my retirement of 50 years in the stock market, and I pull all that money out, I don't get taxed anything on it as it comes out on the back end. Here's the downside to that. There is a maximum that you can contribute a year, and that maximum it fluctuates, and it just, so far, at least since I've been in it since 2008, it is only going up. So initially it was like $3,000 a year was the most that you could contribute to your Roth IRA.
And is that when you started investing in 1946?
2008, but yes.
Okay. I think it's at 7 right now. Wasn't it just at 65 and now it's at 7? Yeah.
They just moved it to 7 this year. So you can contribute up to $7,000 a year. And then again, all that money on the back end is all tax-free. So when you're retired, you're not going to be paying taxes on your income of that retirement amount of money. Another component of that is you can't pull out of your Roth IRA until you hit retirement age of 65. You can pull out of it earlier, but you'll get penalized. So it's essentially like you're paying taxes on it if you pull it out before you hit retirement age.
I'm curious. This is like a question for the group. But has anyone here pulled out money from their Roth or their traditional IRA before retirement age?
Yeah, actually, my wife liquidated hers just because we needed to pay off some debt, and she totally forgot that the money existed, which was really convenient.
Nice.
But the taxes, it was super easy to do. And the taxes, I think it was, they charged us a 10% fee and then 20% in taxes. So, you know, I think it was 10 grand in her account, and we ended up with around 7 grand of it. So it's a pretty hefty chunk that you're going to pay on that. And really wouldn't recommend it unless you absolutely need it. Like you have high interest debt that you're trying to get rid of, would be really the only reason you would ever touch that money.
Yeah. I have a question. I know, Gabe, you just dialed in, but the money that's in your IRAs increases your lendability, doesn't it? Even with like a primary home mortgage?
Not necessarily.
Not necessarily. Okay.
Not necessarily. So it is considered an asset. So if you're looking at a second, third, or more home where you have required reserves, that amount can be used as a potential liquid asset. But just because if you have $1 million in your Roth, you're still limited on what you can borrow traditionally, just based on what your income is. If you want to use what you have in your Roth or IRA or any account like that, liquidate it and pay cash. It's basic rule of thumb.
Gotcha. So it is treated differently than like the, let's say I've got $5K sitting in just a standard brokerage account, which I could take out at any time.
Correct. Yep.
Got it.
Yep. Now, if you're going into a DSCR hard money type loans, it is looked at different because you are almost collateralizing some of that. So it's looked at differently in those type of scenarios, but not in a traditional mortgage sense.
Gotcha. Okay. Cool. All right. Back to you, Shane.
Yeah, so that actually helped me out with my last deal because it was our 6th rental property. And then like, at 5 is when you have to start showing that you have 6 months of mortgage for every mortgage you cover. And once I showed them my my stocks, my IRA and all that, they were like, oh yeah, you're good, no worries. But it wasn't like, I initially thought that I had to have like a checking account or a savings account with that 6 months of money on hand. But again, like Gabe was saying, that 6 months of money was in my retirement account, in my Roth IRA that I wasn't planning to touch anyway, but it just got me across the goal line to get approved for the last loan. Super easy. So going from there, going into just a normal Roth, just a normal IRA, not a Roth IRA. That one is very similar to your normal brokerage account, where you get taxed on the money going in and taxed on the money coming out. You don't get taxed on the money going in. So let's say I make $60,000 a year. I take 10,000 of that dollars and I move it into my IRA account. When I do my taxes at the end of the year, I only get taxed on $50,000 worth of income versus the total 60 that I made, because that 10,000 goes into my IRA. But then again, when I pull that money out, I turn that $10,000 into $100,000, $200,000. When I pull it out on the back end, that's when I get taxed on it.
Shane, do you foresee yourself contributing to a traditional instead of a Roth at any point in the future?
I don't, honestly, because I just have it. I've been running my Roth IRA for so long.
Yeah.
And I've already got the base built up, right? Where you can only contribute this much a year, this much a year, this much a year. I've built it up so much that I just don't want to lose the progress that I have in it.
Yeah. Is there anyone on this call who's prefers to contribute to a traditional, or is contributing to a traditional over a Roth?
Yeah, I go traditional most of the time.
Oh, you do? And may I ask why?
Because I'd rather take my taxes right now are not that bad in the grand scheme of things and stuff like that. And my taxes when I go to retirement also won't be that bad. There's a lot of ways I can shelter them by the time I get there. So, and if I want to live in the United States. So I would rather take and then the effect of what you're doing to your income on your W-2 side. If you're focused on that, you're getting more money into that account in the front end, which will grow at a better interest rate if you're good at investing or just doing a normal S&P 500 and then let it accumulate over time and stuff like that. And that should outweigh whatever tax burden that you're worried about in the end, which, hopefully you peak in your tax burden in your 40s, 50s, and then it starts to lessen up as you get older. And, what do you need to live on when you're going through retirement age?
So, Chad, do you even have a Roth, or are you only strictly traditional?
I'm sure I have some money in Roths over the years of different jobs, and I probably split them 50-50 because I played around with it. But now I know right now that I'm pretty much all going traditional. But I mean, even then, that is a small focus of my overall investing. Most of it is in real estate and, my own personal stock, right? That is just, I'm basically, the IRA is just a part of, okay, does the company that I'm working for have a max out that match? And then the rest of it is all focused on real estate, learning, building myself up, and then stocks and in my own kind of personal account stuff.
Cool. I recently did my first backdoor Roth, which is pretty wild. I don't know how that's legal, but it is. It's actually really simple, but that's for another conversation. All right, Jane, back to you.
All right. I probably am going to skip the TSP talk unless anybody wants to dive into the TSP. I have never used the TSP. I have general knowledge of it. But anybody chime in and let me know if you want me to go over TSP or if you want me to just skip over it.
I'm curious out there because we've got we have a mix here. Who still has money in a TSP if you ever contributed to it? I'm just kind of curious what people are doing with their TSPs.
I
This is
still
Jay
have
here.
TSP.
This is Jay. Hey, I just retired not too long ago. I was contributing to a TSP like most military guys are. And but once you retire, you have two options. You can either let it sit there and collect, and I think it's, the fund that it's going into is a Vanguard fund, so it's pretty good. And or you can roll it over into another option. And it's crazy because when I started the TSP, nobody really gave me information, and it was traditional. And then I heard all this talk about tax-free money, the Roth, and so half of my TSP is traditional, the other half is Roth. It's probably valued at 35,000, and it's just sitting there and collecting money, but no more money is being allowed to be put into it.
Yeah, and if you have it in the TSP, make sure you know which fund it was in. At least when I had it before, I think a lot of people were just putting into the G fund, which was no, you weren't making anything really. So really looking at either your retirement year plan, I think they were the L, the S, or the C, is just something to consider if you did have it in there still.
Yeah, same thing here. When I got out, I left with something like 20,000, and my wife was also in. I think she got 10,000 or something. And Gabe, I saw the exact same thing about a year ago. I was like, I'm gonna check in on these, and I think I had 60% in the G fund for some reason. I had just never looked at it, so I switched both mine and my wife's to more aggressive. I don't remember exactly what it was. I see you got them there. I feel like mine was L, maybe. I don't know. I went over them. Oh, L's not even an option. I don't know what I'm talking about. But I went over them and I picked a more aggressive one, whichever one it was, and I got it out of the G fund.
No, Brian, you're right. I think L is the life cycle funds. You time it to when you think you're going to retire.
Yep, exactly.
Yeah, there is an L fund. My money is in the L fund, so I know it exists.
Yeah, that's probably the Vanguard life cycle funds, I'm guessing, which is a combination of, well, it's not a bad one. Hell of a lot better than G fund, that's for sure.
Yeah, I think that's the biggest thing is, when we talk to people that are involved in the TSP of, and I see that a lot. I see it in the stock market game already, and I see it in dudes that have actually done it, where they're just putting their money into this thing and they think it's working for them. They're like contributing money to a Roth IRA, but they're never actually buying any stocks with it. So it's dead money. Or they just automatically set their TSP, don't ever look at it, don't know anything about it. And it's sitting in the G fund, which is like worse than, it's like a checking account. That's the amount of interest rate you're getting off of it versus what you could be getting out of it. Even if they label something as high risk, according to the TSP, like it's actually, very, very low.
Yeah, I rolled, I took Savannah's TSP and I rolled it over into her Roth IRA, which we managed through Vanguard just so we could have more options than the 5 funds and the life cycle. And then I just liquidated my TSP because it had $900 in it. I just contributed once because I just wanted to see what the registration process was like, because I heard nightmares about like passwords being like mailed, and I think they've cleaned up a lot of it, but yeah, not in a TSP anymore. And I don't yet know if I'm going to have to pay a penalty or not. I guess we'll find out.
We'll see.
Roll the dice.
Okay. Let's roll over. Pat, if you can pull up the game.
Yep.
Dave, you got a question?
Yeah, not a question, just adding on to the TSP, the Chris Black, he was about to retire. He contributed to a TSP, like stopped doing it in like 2009 or 10, and just went to check it, and they lost his account and said he had $0. So basically, if you haven't checked your TSP in a while, like make sure you go in, because I think they switched to company like some years back, and somehow his didn't get transferred. So,
Oh
my God.
That's disturbing, but it's just like not surprising. I've heard
exactly
stories about the TS. Yeah, I've heard horror stories. People losing their, like never being able to log on or change their contributions or anything. Just classic Army bullshit.
All right. So kind of segue over to the game. One, I set this all up again. It's completely free. The money's fake. And you can go through it. MarketWatch will try to get you to subscribe to their website, what you think is their website. It is their website. However, it's just access to some of their extra news articles. So you don't have to subscribe to anything. It's absolutely completely free. I currently have the game running till the end of August. And so the game ends in August, and it'll continue to go from there. And after this game ends, I'll probably, depending on the feedback we get from the game, I'll probably fire up another game right after this one too. The reason that I kept it to just ending in August is, again, hopefully to use the game as an education to how the stock market works. But then like August, you kind of have a proof of concept of whether you're going to be successful with stock trading or stock investing. And then you can go actually invest real money into it versus spending all your time in a fake online game, that's why I'm ending it. And then I'll start a new one over.
I mean, is there any cap on the number of folks who can participate in this?
Not that I know of.
Okay. And it's public, right? So it
is. There's no
need to invite. You just need the link.
Yep, just the link. You just click the link, or literally just go onto MarketWatch and search Ranger Investors, and it'll pop right up. We should be getting a few more people into it. So how I do with the stock market, which is I feel the same thing that everybody does with kind of the real estate, is you're trying to make passive income and not create a second full-time job. So that's how I look at MarketWatch, and that's how I personally invest. I'm not trying to day trade. I'm not trying to do options. I'm not trying to do any of that stuff. It's a lot of just buy and hold, and kind of see what's working and what's not working, and shifting money between a lot of them. I'll tell you, most of my stocks I have had for a couple of years, and I have like some staples that I hold on to, just because they continue to do well, right? And I'm not gonna back out of them now. But I'm not somebody who's going in there and making multiple trades a day, even a week or a month. I'm kind of just buy and hold, and then when I need the money to do something else, it's there, and I can pull it out and sell out of some of the stocks. So
Shane, can I ask you a question?
sure.
So you're using money that you have in the stock market for like the capital requirements for your real estate investments, but
Correct.
you can't pull out stuff from the IRAs or the TSP or whatnot without penalty. So do you have like a separate dedicated brokerage account that is like, hey, I'm putting capital into this, growing it with the expectation it's coming out for real estate? Like, is
Yeah.
that a purpose?
Yeah, because I have my Roth IRA, which again I can only contribute the $7,000 a year in, and I'm max contributing to that thing, and that's just my retirement account. That has nothing to do. That is also just again a bucket of money that I can use to say I have 6 months worth of mortgage payments for the rental properties that I have, and then I have just a normal brokerage account that I do my normal trading with, and I'm also a lot more aggressive with that trading. So, for example, my Roth IRA, I just have all that in the S&P 500 and this S&P 500 index, and I just have that doing its own thing. I don't trade anything on it. I just kind of let it ride. Now, my brokerage account, that is the one where I'll sell. I'm invested in individual companies, not into anything else, and that I can play around with it. I can trade it, sell some stocks, buy other stocks, and then when I want to pull out of that to put towards real estate or anything else that I want to do. And I can contribute to that as much as I want. And then just know that whenever I pull money out of it, I just know that whatever year that's in, that at the end of the year, my taxes aren't going to look great because it looks like I've made a decent amount of extra money that my W-2 wasn't taking out the funds to pay those taxes at the end of the year. So I can expect to owe taxes at the end of the year.
Do you also keep like a money market fund or checking or something for like a capital reserve? Money that's not going to swing it would if it's in stock market.
Yeah, absolutely. So I have how I set up my real estate stuff, or me and my wife really have set up our stuff is we have our personal checking account, our personal savings account. That's our normal W-2 income. That's all of our normal stuff. I have a separate checking account that is all of our real estate. So that's all of our mortgages going out, all of our rental coming in. That is every bill you can think of that comes to almost like a business account. And honestly, if I would have done it correctly, I would have set that up as an actual business account. And actually, I was talking to Dave about it the other day. Like you can get the Amex, if you're still in, you can get the Amex Platinum business card for free, just like you can get the normal Amex Platinum card. So that may be something that I look at, right?
Wait. You said I tried to get the Amex Platinum business card and I had to pay for it because I already had the personal Amex Platinum.
That is a good question.
That's
because we've got,
true.
yeah, I've got one, Savannah has one, and then we each had a business platinum. And then when I was under the illusion that money grew on trees, I got a third one for our like property manager. I've since canceled 2 of them because I was like, this is fucking not worth it. But yeah, I couldn't get that incentive with it, with the business platinum. I had to pay for it. But also on that, since I have the soapbox, right now with the I believe it's the personal business platinum, they'll reimburse you for a Wall Street Journal subscription, which is really like a Dow Jones subscription, which includes MarketWatch in it.
Oh, nice.
Fun fact, yeah.
Yeah. Like I talked about our checking account for our business. Then we also have a high yield savings for really a combination of our business and us personally, and that's through Amex as well. because it's like right now it's at like 4.7 APY.
Does that adjust?
It does.
How often?
That I don't know.
Yeah, I'm curious out there, like folks in the call, like who's got the highest savings yield right now? Like, is anyone beating that with a savings account?
I think Apple's was pretty close to it too.
Apple, okay. Yeah, I know some. I think Coinbase too, and some crypto stuff, but you might lose your money to Sam Bankman-Fried. Sorry, don't mean to cut you off again.
There you go. Chad, did you have something to throw in there?
Yeah, I was gonna say Navy Fed is really good. I'm trying to look up what I think Navy Fed's got great business accounts. And I think my interest rate's better than that on the high yield one too. I'm looking at it right now. But I use for all my rentals, I do everything through Navy Fed.
I've never banked with Navy Fed, but I continuously hear good things about them.
They're great for car loans and like everything else.
Yeah, I mostly use USAA. I know they're not the cheapest by any stretch, but I like their customer service. However, in Florida, they're not an option because the insurance market down there is going belly up. So I have to use the quasi-government provider of last resort, Citizens.
Yeah, that was going to be my question for the whole group is like, yeah, what are you guys doing for homeowners insurance and stuff? I was using USA for a long time, loved them. And then I bought my triplex and they tried to totally fuck me and wanted to charge me a ridiculous amount of money per unit. And I was like, yeah, I'm going somewhere else. And I found somewhere that was like half the price. And
what was like ridiculous by what? Do you remember? Like what they're actually charging you?
What was I getting up to? I think it would have been, yeah, and it's not going to be as ridiculous as Florida, but just relatively. But what was it? It was going to be, I think, 6,000 a year, and I was able to get somewhere else that was like 3,200 a year and stuff.
Gotcha.
So that's more normal.
Yeah, that is more normal.
So, and I was just like, yeah, I couldn't believe they were trying to do that to me, and they wouldn't work with me. They were like, yeah, it's just what the system says and everything else. So,
yeah.
Yeah,
Shane,
I do.
what you get insurance through?
All of my insurances, we do it through State Farm.
Okay.
So we lump our auto, home, and all of our rental insurance through them. And then we also have a $1 million umbrella policy through them, which was like extremely affordable. I was like, my wife knows the numbers. She's the numbers lady.
now you haven't done any claims through State Farm though?
I haven't.
Yeah.
I haven't. And that's what I've heard of. Like people were like, when we switched from USAA over, they're like, yeah, when it comes to claims, USAA is phenomenal. Like you pay a little extra for it. But when it comes to claims, like they're just like, yep, whatever you need done. Where we tried to do one claim with State Farm and it was like pulling teeth, and we ended up not using them and just paying out of pocket for it. Because it really, the minimums or deductibles it just didn't make sense.
Yeah, no, and I don't want to, I mean, everybody's system's different, but yeah, when I was talking to roofers, trying to figure out different things, I was like, who's the best insurance and who's the worst? And they're like, the best is Erie Insurance and the worst is State Farm. I was like, okay. And that was like, but that's Indiana, I don't know if every state's different and stuff. So
did you say Erie as in Lake Erie?
Yeah, there's an Erie insurance company up here that apparently is really good to work with. So
I think they're pretty big in Pennsylvania too.
Yeah, I don't know where they all are. I had never heard of them until, like I said, I was calling around to some roofers because I had an issue, and I just, while talking to them, I was like, well, I'll get some answers out of this. But I'm not even with that group. I'm with Travelers right now, and I'll probably switch again. And then, on the same thing on the multifamily side that I do or my day job, the insurance rates have blown out, Florida being the worst, but out west, you're looking at $1,000 a unit a year, which it used to be $200-300 a door and stuff. And so it's all going up.
Yeah, Brian, if you're still listening, what are you paying on your like per unit basis up there in the Northeast?
For insurance,
Yeah.
I've actually got my books up right now. So keep in mind, USA will only do up to 4 units. So I had to switch for the 6 units, but let's see, Park Street, USAA 185 a month. That one in 2023 was 2213 for the year. I've got what is that? That's a 4 unit. I got a 3 unit North Main Street, 244 a month. So 2023, 2900, something like that. And then I got a duplex with them also. Oh, I don't know what that one. That one's got an escrow account, so I just pay the mortgage on that one. And then for my bigger stuff, I use a insurance broker, but I ended up going with J. Edward Knight on one of them and Union Mutual on the other. Let me see. I pay 4,000 for a 6 unit
A year.
a year.
Annual?
Yeah. So I will speak to USA service. I've done, I think, 5 claims total. I got broke into twice in Texas, and then I just had a roof incident up in Maine. It is night and day working with one other insurance company that I've had a claim with versus USAA. USAA has been fantastic. They're always right on top of it, and they don't argue with you about, or they don't argue with the contractor's price. And then I had one other claim with another one, and it was a nightmare. I ended up canceling it. I paid cash, and I canceled that insurance the next day. I think I saved $300 a year going with the other company versus USAA. Biggest mistake I ever made. So I don't do that anymore. Anything 4 units and under, I go USA.
Yeah, I've had good experience with USA. I've done, I think, 3 claims with them, and one of the claims was like a recurring issue, and they were still playing ball. They were pretty good to work with. Gabe, I'm curious because you must see tons of you see everyone shopping for insurance. So, like, what's I mean, yeah, what do you see? Like, what's cheap out there? What do you not recommend?
So it depends on where the home is. Also, that's one of the big things. USAA, great service, but they are pricing themselves out of a lot of the area, especially the coastal area. So Charleston, Myrtle, Savannah, you can get it, but you're just going to pay what they have, sometimes twice what some other companies are. Florida's Florida. So there's nothing really good there. A lot of it goes to who you can bundle policies with. So companies are doing a lot of things. State Farm, Georgia Farm Bureau, LIMU, Liberty Mutual. A lot of them are doing great stuff, but it is also so independent. So we have people, I mean, just like when when you were buying a home, you might get one policy with one company, another policy with a different company, completely different. And what's good for you might not be good for someone else. So it is so based on what your history is, your claim history, even credit score and assets come into play. Some companies just don't want to take the risk, and they court a certain buyer just by how little risk they're going to represent, essentially.
Yeah, I remember. I'm sure you do a lot of them, but when we were shopping in Florida, State Farm had pulled out of the state. Allstate had pulled out of the state, and even working through their like partner companies, it was a no-go. USAA did quote me, but they quoted me on a single family home over 9,000 a year, which is not even in a flood zone. And then and it was like a block home, like an impenetrable block home, and it was Citizens was our only option, and I think we're paying about $300 a month.
Yeah, and
which is totally fucks up your numbers if you didn't know that going in.
Yeah, and USA just doesn't want to take on the risk. So if you want their name, you're paying for it, and yeah, they understand that loss of business, but they're not taking on that liability also.
Yeah, cool. All right, Shane. Sorry, that was a tangent.
No, you're good. So back to the stock market game, and again, using this as an educational tool to see what works. Best thing I like about this in the stock market game is you get to look at everybody else's portfolio. So it's not just this magic number of somebody's doing really well and they're beating me out. You can literally just click on their account, see what they're invested in, and now you've gotten free research into what to invest in. And I've used this multiple times where I put on games, show people the ropes, and then essentially steal their ideas of what they were invested in. Some of the companies never heard of before, but they're performing great, right? It's not like, hey, I love, Toyotas, I love my Tacoma, so I'm only going to invest in companies that I know. I'm invested in companies that I have no idea, or I'm not personally using any of their products, but they're performing really well, so I'm doing good on it. That's what I like about the game because, like I said, you can see how everybody's doing. It's also
I'm investing in the S&P 500 as a benchmark. So
yeah, so I'll talk kind of benchmarks for success through the game. One being, right, if you compared it to and go off of, I mean, we started the game with $100,000, right? But you pay more attention to the percentages, especially as you get into it. So one comparison being a high yield savings account that you're getting, let's say 5% annual return on. So if you're able to beat that 5% annual term off of what you're invested in the stock market, then that's a win. Another one that you can look at is, again, look at the SPY or the S&P 500 index. And if you're beating that out, then you're doing well. If you're not beating that out, then that tells you, hey, maybe I just need to put all my money into that S&PY or at the SPY and let it ride because it's going to continue to go. But you can also look at it and see if it is beating out your high yield savings account. So that's like benchmark 1, high yield savings, benchmark 2, S&P 500, and then anything above that, right? You're like, okay, I'm good and I got this and I'm making a smart decision.
Shane, have you ever used an advisor to either like actively manage your funds or you pay anyone for recommendations?
I haven't. And I've done all of my investing really kind of on my own. I do a little bit of research into it, but honestly, I was in a couple of group chats, right, where people were talking about what good stocks to invest in. Looked at stuff like Motley Fool. There's a bunch of like, hey, here's the top 10 stocks. Here's the Google top 10 stocks. And here's this other list of top 10 stocks. But I don't know how much that is paid advertisement versus real. So what I do is I'll look at like 3 or 4 different lists and identify common companies across the 3 of them. So if all 3 of them are saying that this is a good company to invest in, hey, yeah, sure, I'll throw some money at it. But I usually don't just use one single source to identify who I'm going to put that money into.
I like the plug for Motley Fool. I'm a big fan.
Yeah, it's
even just reading their stuff is.
I think they'll.
I like their sense of humor.
Yeah, yeah. It's again, it's a tool. I mean, you can use all this stuff on MarketWatch. MarketWatch has like if you want to get into the weeds of statistics and all that stuff, like you can get into it on MarketWatch.
It's funny too, because like it seems like every book I read on personal finance, like like a random walk down Wall Street, great book, 300 pages long. You get to it, the end of it, and you're like, yeah, he's just telling me to invest in the S&P 500 because I'm probably going to get my ass kicked. Like I have no business picking.
Like the same thing with like the day trading and the option stuff. Like you got to realize that you're getting into options trading. And I haven't done it. I know people that have done it and been successful, and I know people that have done it and not been successful. But what you got to realize is when you're getting into options and stuff, that's what there are people who get paid a ton of money to do that. So when you're looking at, those are the people you're competing against, essentially, in the options market, right? So there's a good chance that you're going to miss out or not have the information that somebody that their full-time job and they have 6 computers in their basement and they're just running numbers and throwing options in there, versus you who's just like Googling what's a good option. Oh, GameStop. This sounds great. I'll do that. You know what I mean? So there's a lot more that goes into it. And that's why I'm a fan of just buy and hold. Again, it takes zero management. It's just sitting there pretty much the same as your savings account. But it's continuing to grow. And again, you have those benchmarks to say whether it's growing at a faster rate or, hey, maybe I need to play another round of MarketWatch and figure out what is doing well. Here's the downside to MarketWatch is you start investing like, March, you come out in August and you realize, holy shit, I made a 30% increase, but it's not real money. So if I would have just made the decision, if I would have just went all in on it, March and just went all in, I would be sitting on a 30% increase, but I'm not because it's fake money, which is again another reason why it's like, hey, do it as a proof of concept and then do it for real. So again, just like this, where we're starting out with $100,000, you'll start out with the same thing of whatever money that you put into your whatever brokerage account that you're using. So if you'll click on, go to pull up my account. So these ones that I bought are some of mine that I am actually invested in, some that were off of another MarketWatch game, just random ones. So you can see some of them are performing really well and some of them are not. And that's kind of the game of, do you hold on to a stock that isn't performing well, or when do you sell out of a stock? I don't know those answers, and I'm also not going to recommend like which stocks to get into. But again, you can look at these, and instead of seeing the daily number increase or daily number decrease, that far right column is since you bought into that stock. So that would be your total if you just bought and held it. When you're like looking up and researching stocks, they'll only give you what the current number is. So you might look at a stock and it might have a 10% increase that day, and you're like, oh, this is awesome, I'm going to get in on it. But you're getting in on it at the top of its wave, and then it just drops off.
Which is generally what human beings tend to do, which is why humans are bad investors by and large.
Yeah. So, I mean, luckily I got into the stock market in 2008, right when the whole housing market crash happened, right? So stocks were at like a rock bottom. And then I got into it and I saw huge gains right away. And I was like, this is awesome. And then it kind of leveled out, right? And then COVID happened and stocks plummeted. Everything plummeted. And I used that as an opportunity to buy stocks that I knew were not going anywhere, right? I know Google's not going anywhere. I know Amazon's not going anywhere. I know Tesla's not going anywhere. But guess what? Their stocks plummeted because of COVID. So now I can buy them at a really low point and then just wait for them to come back. Because again, they're a huge company and they're gonna recover. They're not gonna bottom out because, COVID. So that there's a lot of analysis that goes into it. It's however you choose to do it. But what I would recommend doing is doing kind of a spread like I have, where you're invested in a bunch of different companies because it's giving you insight into whether those are good companies to invest in kind of longer term, right? If you back out of my account, and I don't think anybody's in here that's in the group. And again, they may be just random people that are in here in the actual thing, but go to Nick Stein, right? So he's again currently in first place as a 3% win in the game, but you kind of see all he did was he bought one stock, let it go up a little bit, and then sold everything, and then like cashed out at a $3,000 gain, and then is doing nothing with it now, and now that money is just sitting stagnant, and it's not doing anything. So he's not going to continue to keep capitalizing on that. If you're only buying into one stock to see how well it goes, then you're kind of missing the point of casting that broad net for the game. And again, helping educate each other on good investments to make in the future with real money. I think Offit has a pretty good spread in there too on his. You can click on his.
Yeah, I also don't mean to cut you off, Shane, but we have hit our backstop.
Okay.
Before we
Yep.
get
No, that's really it, and it's good because like he has a super wide spread, and he's on into a bunch of different stuff that I'm not into, right? So that's just free education for me of like, oh, he's doing better. Okay, maybe there's just some stocks that I'd look at in in real life, but that's the whole idea behind the game is you can buy and hold or you can buy and trade. What I won't do, and just for anybody that does the MarketWatch game, if you go in and you're being like super aggressive and you're doing the whole, I'm going to buy a $3 share company for $100,000, wait for it to go up to like 325 and then sell it, and then find another share that's $3 and go up a little bit, I'll kick you from the group because that is a terrible financial model to go off of. And I don't want, if that works for you, awesome. But I don't want to proliferate that as a way to use the stock market, if that makes any sense.
for sure. Awesome, Shane. Thank you.
Yeah, absolutely. And anybody can hit me up one-on-one if they just don't understand how to execute trades. It's super simple. You just hit trade, and then you type in the number of shares that you want to buy, and you click buy. And that trade won't execute until the stock market is open. The stock market is open from 9:30 in the morning till 4 p.m. weekdays. So you can put it in there. There's also some variation with the trades that you can do. You can set it to only buy the stock when it hits a certain price, and you can have that set for a month. So you can say, hey, I want to buy Apple shares, but I want to buy them when they dip down to $800. If they drop down to $800 this month, I can set in that window of, hey, buy 30 Apple shares at $800 a share for this month. And if the Apple drops to $800, then you execute that buy without you doing anything, and they buy those shares. If Apple never drops to $800 a share, then hey, no harm, no foul. You don't execute the trade, and you didn't buy into the stock at a point that you didn't want. You can also do the same thing for selling it. If you buy a stock and you're like, hey, once this hits 100% increase, then I want to sell it all. Great, you can set it up, and you can set it up to do that. Those are just setting up your limits and stop trades. That'll be an option in your trade menu when you get to it. But again, that's kind of a little bit more advanced. But we can get into it if the game kind of picks up and people want to get into that. Just put it in the group chat, and I can go over that and do a short little video on just how to do stops and limits.
Yeah, we just got to get the word out and get more folks in here.
Yep, working it.
And another thing to get the word out on, we've got, I'll just kind of end with this. We've got our first in-person meetup, happy hour coming up. April 19th, Friday in Savannah. I don't know. Well, Teresa, you better be there. Shane, you're coming up?
I am.
Yeah.
Yep, I'll be there.
Yes, we'll be there.
Hell yeah. Yeah, it looks like we're going to have a pretty packed house, so it should be a good time. And like everyone is welcome. So Rangers, family, friends. It'll be a good time. Java Burrito on the 19th of April, Friday at 5:30. There's no cover.
Perfect.
All right. Anyone have any final comments, questions, concerns? All right. Well, thank you. And for our new folks, thanks a lot. I appreciate it. And yeah, if you could help us get the word out, we'd really appreciate that too.
Good night.
Bye.
Bye.